Hello everybody and welcome back. Well, so far the markets have been behaving correctly. We've had the maximum pain down here, we've had the breach of the resistance, and of course the pullback to the 20. Most things that we've been talking about for the last couple of weeks on this channel have been working. But with the break to a new high, does that mean that we have in store now the movement towards the 429, 4300 zone? This is something that a lot of people are asking out there, both bulls and bears, because bears really want to short this level. But there's a bit of news that's coming out in between then and now that we have to worry about. And that's, of course, the jobs numbers in the US. So with strong action into the jobs numbers, does this mean that everything's going to be all green? Well, we have to stop you right there because there's so much more to be talking about in these markets. Let's cover crypto, commodities, and stocks right now in detail. See you soon. This will be a great one. Well, welcome back everybody to the Daily Show where we talk about stocks, cryptos, and commodities. This is the Daily Show recap for the close 2nd of June 2022. And we'll start off here with the Fear and Greed Index. Still a pretty decent fear rating, 29, but as we know, that was not what the market was showing us in the last 24 hours. And as we've spoken about now, since really the low, we're still remaining in bullish price action for now. And we'll take a look at that later throughout all markets because risk on is happening here in a decent way. Let's talk about Google, Amazon, two of the stocks that we know are going into splits and we had a suspicion would do very well. Great session for those. Another very nice add-on. And they've been pretty strong this week, actually. We also had semiconductors really coming out of the gates, showing some strength, which has been a little while since that's happened. So what I think is more important that everyone understands, though, is the way that the markets actually try to manipulate everybody out. And as we know, the first hour of trade, we call it here on the channel, the retail hour of power. The close is Wall Street and effectively the composite man. That is the big investors, the big hunters in the market. If they close bullish, that could be a very good sign of things to come. If they close bearish after a nice rally, may not be so good. So over here, you'll notice it went up, then it went straight back down. It flushed orders around this area, which we'll take a look at later, and then it rallied throughout the session. So I think it was really just trapping more people, especially retailers, into the idea that the market was going to go bearish, and then it flipped, and all of a sudden we were going bullish. Very common, very usual. The first hour, that's where the trap generally lies, either just before the market open up until around that 10:30 a.m. New York time. So which sectors were doing the best? Well, of course, it was all about hyper stocks and really big kind of, risk on day. So PBW10, whenever you see these out in front, usually means every single hyper stock is doing incredibly well, and they certainly were. We had semiconductors having a great session, and also gold and metals coming out of the gates very strongly. The sector that's been really everybody talking about all of 2022 though, energy, well, that wasn't up, and that's because there was a huge rotation occurring throughout the market. So we'll bring up a couple of oscillators here. We've got the McClellan oscillator just to show you some things that I think a lot of people have been discussing, and that is whether the market is actually starting to show the signs of a full-on base bottom. So it's very rare that this actually occurs where we go from a negative number straight up into a positive number, and you'll notice here it happened at the end of 2018 into 19. It happened, of course, during the switch, which was the pandemic, and we've just seen it happen again. Now, effectively what this is it really can be applied to any stock exchange, but you want to generally apply it to the most diverse, the most powerful stock exchange, which is the SP500. So when this really goes from a significant change, such as moving from negative to the 100 points, this is really what we call a positive breadth thrust. So effectively, it can show us a very strong movement in the underlying market. And this is something that can really change the game. And last time, each one of these periods, it marked the bottom. Now, does it mean it's 100% accurate? Absolutely not. But it is something that people look at, and I think it's an important one to bring onto the charts. And it's consistent with what we've discussed so far recently. That doesn't mean, though, the bears won't come back at certain levels. So we'll need to look at that. These are some other problems that we've got, though, in the markets. Look at this real disposable personal income for people in the US. wow, that's a big drop off. It's really coming back. Everything that was here due to the rise of cost of living, fuel, etc., has been wiped off, and any of the savings in terms of real disposable income has been completely taken away. So not really a great sign coming out of the US, and of course the market's already reflecting this. Another thing is, in the May 2022 report highlights so far, we've highlighted here small businesses. Why? Because small businesses can tell us a story of what medium and large businesses may do in the future. It's all been about how great is this? Everyone's hiring. There's not enough workers, etc., etc. However, as we move through this economy this year, and this is why the jobs numbers become so important, these non-farms, I would expect medium and large businesses to start to sack people. Remember, we just saw Elon come out and say, you know what? If you're working from home, don't come into work anymore. You're fired, pretty much. You have to come into the office. Now, that is a pretty drastic statement. And of course, a lot of businesses are now starting to say that. You've got to come in for at least a few days a week. You can't just stay working at home. But I think this has got to do with productivity. And what you're going to find is that workers are going to be cut. Why? Businesses will start trimming as they go into difficult times in the economy, which we are starting to see. Another thing that I thought might really show you the potential here, and this is the potential of a turnaround story to go with that oscillator, was the amount of buys or calls that are being opened currently. And you'll notice that options really hit a crescendo during that 2021 area. This is where everyone first came. I feel like retail really first found options. And you know I love options on this channel. We talk about them a lot. If you're interested in finding out more about that stuff, remember to subscribe and smash the like button, everyone. But this area here was a crescendo in the amount of calls opened. And we know how that worked. It wasn't very good. Now we're back to pretty much pre-pandemic levels. So back into that 2020, 2019 area of interest in terms of open calls. Could this also show the bottoming of the market? Remember, when retail is doing something, often the market will end up doing the opposite thing. So retail's taken all the calls out. Is it time now for the market to turn around? That's a question a lot ask. Good signs for the market so far. VIX underneath 25. This has been a huge support and resistance barrier in the past for it. A movement down here is quite significant, and I think that it does bode well for the market and the recovery that we expected a few weeks ago, and that we're still expecting to potentially come through as long as the price action holds up in the market structure and everything, the supply, demand, etc. PCC, put call ratio, right in the middle, just showing that there's still a decent amount of puts being open to the calls. That nice little rally down before the movement up would have done a good job of sucking in a whole bunch of puts. And don't blame yourself if that happened to you. You just need to start reading the charts. Hopefully you can start to spot these things a little bit better, and it does help out. Now let's move over to US 10-year. So US 10-year, as we know, is relatively important at the moment. Everyone's looking to it to figure out whether the market believes that inflation has topped. We, as a community, did speak over here about how we thought that was the topping of the US 10-year. It's since declined and it's pulled back up. And you'll notice I've got a little trend line here and it's kind of hitting that resistance. But in general, what I think about this US 10-year is, if it, of course, starts to turn over, what's going to benefit from that? It's going to be something like the TLT, so the 20-year Treasury Bond ETF. We did see some resistance over here that it was kind of struggling with, and at this stage it's just been all sea of red. But if the 10-year goes down, this will go up, and we'll continue to do the analysis at this stage, a series of higher lows, though that one in there on the smaller time frame is a little concerning. Let's move over to the DXY, another drop day for it. Didn't quite get to our 103 level, but it did go back over here to the 102.50, and then it just shorted off. This is a good sign for markets. Obviously, a weakening US dollar could mean that money is coming out of this and going into asset classes such as bonds, and of course, the stock market as well. So positive sign there. And it's been very positive for gold as well. So a lot of you would know that we switched to being positive on gold around this area here. This was an exceptional buy. Of course, this was a huge demand zone on the daily. Definitely zoom that out in your own charts. Have a look at it. It's a super area. And we spoke about this zone in the last couple of sessions. Now that it's cleared also this area up here, things are looking a lot brighter for gold. And a lot of this will come down to also the US 10-year. We'd like to see the US 10-year turn down. And if that happens, then gold could really start to ramp for a little bit longer. Don't ask me why now. It's a big explanation, but certainly a very, very decent move here on gold. It's broken quite a few things. We've obviously gone through that trend line now towards the downside that's here. We've got through the high, and for now I would expect probably the street to try to buy up bottoms. So that is that the market comes down, market turns around, and I would expect some purchasing and hopefully a continuation here of this bullish trend. Gold looking fairly strong on the charts for now. US oil, what a conundrum. It's up, down, and all around. As we've warned recently, this is a very tough trade at this point. And it's the same with natural gas. There's geopolitical risks, there's random supply demand, questionable things going on. And of course, there's the OPEC cartel really, I would almost say, orchestrating what's going on in this world. So yeah, US oil, very tough trade at the moment. Maybe one you want to stay away from. Same with natural gas. It's up, down, and all around. Look, I do have negative kind of biases on this over multiple months, but that doesn't mean it happens like this. It'll happen over time. And do remember with natural gas, anyone that's trading this, it's called the Widowmaker for a reason. Exceptional moves each way, which can really hurt you with margin and with CFDs. So be very careful out there, guys. Look through the history. Go to the left-hand side and see what natural gas has done in the past. It might surprise you how aggressive it's been. Let's get into some stocks now and talk about Tesla. Well, Tesla was doing pretty damn good. I mean, a great day for it. It's flipped to bullish down here for us. And we moved through the daily 20 moving average, a very nice movement. Again, does this mean more to come? Well, it's got a little doji over here. It's been doing battle with. You'll see the closure actually happens on the body there. But, any real throughput, let's say continuation here in the markets should put Tesla through to the next level. And Tesla could really ramp fairly quickly. There are some good zones. So let's have a look at the 1 hour now just to check out Tesla. So very strong movement, series of higher lows, higher highs. So that is effectively all of this was higher highs and higher lows. And if we're moving up, where's the next stop? Maybe an 850. Start to try to fill some of these gaps that have been left behind by Tesla on the way down. Look at this gap. There's quite a large one there. So that would make a pretty much perfect sense, but it would require that the markets come with it. So let's look at our market analysis, the indices out there. Let's talk about XLY, XLP. So as a lot of you know, we use this as risk on or risk off. A few weeks ago, we got the risk on, well, not even a few weeks ago, literally a week ago, we got basically the risk on setting here. So it said that, things are looking a lot better for risk on. And since then, we've been mostly risk on is giving you outperformance to the defensive sectors in the markets. This still should continue up here up until around that 2.2 on the ratio. And this is XLY/XLP. So consumer discretionary versus the staples. It shows us more than just what you think. It's really a good barometer of the American consumer, risk on, risk off, and generalized sentiment of the markets. Let's move over to the US 30-year. This is the Dow. Nice little bounce off this area. Again, we thought the Dow was showing us signs of very strong recovery, and it did so. The Dow is not usually the best thing to trade anymore. The SP500 has become the best, but over the years, because it's just so many more companies, more diverse. But look, Dow has a very similar reading on it, 34,000 for a big supply area over here, or resistance zone, as many of you would know it. And this zone over in this area here, it really points towards, if the market gets there, this is where I feel like the bulls and the bears will duke it out. But notice that the Dow has closed around the resistance. It all comes down to really these jobs numbers. Now, the problem with jobs numbers, that is non-farm payrolls, they happen every first week of the month in the US. Because you don't really know what the number's going to be, and even when you know the number's going to be, we don't know how to interpret it easily. It's a very difficult bit of data to interpret. What ends up happening is you'll see the market go crazy during that time and then pick a direction. So often the first impulse move from non-farm payrolls, let's say it was down, will be met by, it will be grabbing orders down here, grabbing demand, and then moving towards the other way. So be careful when you're trading that. And I think a lot of these markets will be at technical resistances ahead of that information. You notice the DAX here opens just a little bit higher. Nice little kind of try to breach this resistance. It's not doing so in current market. So obviously this is not, the time of this recording is not happening during the European session. But again, very strong, nice pickup here in the DAX, and that looks pretty good on the charts. IWM at resistance becomes, or support becomes resistance area. Still looking strong. It's technically done the distance we expected, but does it have that little bit extra in it, which takes you like this? That would push you into this area here. And I have a suspicion that's probably what IWM does want to do. It makes the most sense, and it's a good little level. Now we breach this. Well, I don't know. Maybe the bulls can get a little bit happier, because at that point you're starting to say, well, the whole sequencing down, the whole movements, the waves, all of these types of things, maybe we're in a new one. And that will be very, very interesting if it occurs. Otherwise, bears, I'm sure they'll be sitting around those zones. Let's move over to the Nasdaq. Nasdaq, strong move, no doubt. Very, very strong. It is at a point of resistance here around this 12,900, 13,000 zone. Big psychological level. Previous orders sitting around this area as well. There's a whole bunch of dojis and other things that are around this area. So it makes sense for it to be here ahead of the non-farm payrolls number. Remember, that's coming out at 8:30 a.m., 1 hour before the market opens, New York time. So I expect the market to kind of be hovering around this zone, trying to test that 13, 12, 9 zone, figuring out whether it can break through. If it does break through, where have we always talked about? The gap fill over here at 13.4. That means that there could be a nice ramp into that zone, possibly even for Friday. I don't think it will do that much, but it's possible. Anything's possible, yeah? So if the non-farm payrolls pushes it through, these are levels that we're looking for over the next week. S&P 500 time, same thing. We spoke about the 20 moving average breach, which was such an important level because we know this market loves the 20 moving average. Just look at the previous history. It came down, found dynamic support on it. There was a lot of orders sitting here. And we'll look at the small time frame in just a moment, but I did want to look at the weekly. Check out this weekly. So why do we have this 4,300 as such a key level? A lot of it has to do with the 20 moving average weekly mean reversion. We know that the markets love the 20 moving average. If you want to just have a look at how much they love the 20 moving average on the weekly, check out this. 1, 2, 3, 4, 5, 6, 7 breach. Not good. And then it picked back up. Then it went a little bit far. Where is this level? So a lot of signs point towards that. Fibonacci just behind it, all sorts of things. Let's now look at the small time frames just to understand what the market did. So the market came down. Effectively, it made a double bottom off this previous structure area, which we talked about. The 41.25, 41.27 zone was a great resistance. Why? Because it was a defended zone. Look at our previous videos. We spoke a lot about all these levels. This was actually a pretty decent trade and pretty easy if you were in the smaller time frames. There was a lot of structural formation around here. You can also see the wicks showing that there was some buying that was occurring. When does it happen? During the first hour. Why? Trapping retail traders into the short. It made a slight lower low and it came back and really kind of swished those areas. It swooped them, it took them all out, the sweep happened, and then we moved in a very aggressive trend towards the way up. So if you're ever wondering why you might get owned in certain trades or not necessarily do well, it's all about bringing those higher time frames down into the lower time frames and doing the work and the studies of understanding what's going on in effectively what is a fractal market. All time frames obviously matter quite a lot. 41.67 was breached at near the close, which is pretty important. That's a good little level for it. And where do we expect big issues to happen? Around that 4,200. So I wouldn't be surprised for non-farms to either be right there or right here ahead of the news. Most likely those are the two zones that the market will try to breach. Either it breaches back down or it will look to breach up and of course move towards that 4,300 area. Some key levels there to be watching over the next 24 hours. Let's move on to Bitcoin and crypto markets. So they've really struggled recently, but it has been, as we suspect, whenever you get a decent day in the Nasdaq, Bitcoin does a little bit better. Bitcoin shorts, still relatively low. Bitcoin itself bounced off that zone we spoke about yesterday, and it is showing some signs of recovery. There's no doubt that 32,000 is the key area. All of this is mostly noise until we breach that. Why? Because there's orders here. There are certainly some kind of big positionals, and effectively that's a supply zone. So in this case, we've come back down, we've shown a level, and what I would go with here is that at this point, it's looking more maybe bullish than bearish, but we've still got so many problems. You've got over here the structure, you've got a kind of random recovery. You've taken out that level, but I would expect pullback before it goes long. These are all the types of things. Bitcoin is a difficult trade on the small time frames unless you find the high time frame levels. So over here, it was a fairly easy short. You almost got a Wyckoff up there as well, it looks like. But over here, is it an easy long? I guess if you've got like stops behind the last lows, maybe behind this swing, it becomes a little bit easier, but then is your risk reward correct? So crypto markets are tough out there right now, and it doesn't matter which one you look at, they're all tough. And of course, Ethereum and other cryptos are just so much weaker. Like you bring up something like Matic, and you really look at this on a daily, and you'll just see that it hasn't recovered anywhere near Bitcoin. It's not even looking healthy. And this is what's happening with all the alts right now. So be careful out there. If you haven't already, come and join us in our Discord community. We're getting close on 10,000 people in there. And of course, if you want to join our private Discord community, there's a link for a 7-day free trial in the link description down below. And we do private pre-market hangouts to discuss the markets each day. So that's really cool. We've got a Twitter as well at FX Evolution where we post. And of course, over here, we have the biggest bit of news coming out for the week ahead, and that is the non-farm payroll employment change. So will it be negative? Probably. Will it be pretty bad? We'll see. Will the market go up or down from it? That's going to be a tough one. And I think anyone that's calling what they know, even if you knew the number, it can be difficult to figure out the direction considering that the market is expecting, or what's the Fed going to do? Really, it becomes, what is the Fed going to do after seeing a good or bad number? Does that mean there's less interest rate hikes coming? You know, these are all things that the market will interpret, and what we want to do is follow that flow. So we'll be able to follow it, and hopefully we'll be able to see it in the charts. Thanks so much for watching. If you enjoyed today's video, remember to subscribe, smash that like button, guys. We'll see you in the next one. Bye for now.